Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Wednesday, April 17th, 2013. Well, a continuation of the trend to the downside today, a candle that's made a lower high and a lower low. A black body candle today in contrast to the previous day's trading where we saw a solid bullish white body candle, a candle where the buyers had control of the market and they were strongly committed to trading the market higher throughout the day. That candle for the previous day's trading did find strong resistance at the 1576 level, and I suggested that that was potentially a very strong barrier to this market, and for today we've seen very strong price rejection from that area. A solid bearish close with the close down between the midpoint level and the low, suggesting that the buyers have a moderate form of control when the market closed, and they showed some decent commitment, although they did lose some commitment as evidenced by the shadow as they traded down around this intermediate level of support from these minor swing lows. The market was able to close down below the 1555 level of support, and that could be significant. But we have seen the sellers find some solid momentum today, and it does suggest that there is a possibility of this market trading to lower levels. Now obviously this area down around 1540 is crucial to this market if it is going to trade lower, but we do also have this strong barrier at 1555 for the market to trade up through, and an even stronger barrier up around the 1576 level for the two previous days trading. That has been some strong resistance for this market and will be very important. If the market does trade in a bearish manner early down through this level around 1540, we could quickly see the market testing down to 1523, but we should see significantly strong support down there. It coincides with the top of the cloud, and what we should be doing is watching if the buyers come in around that level, and there would be potential for the market to change trend back to the upside if we do trade down around that level. But we can't preempt the market, we need to react what's going on at the moment, and at the moment the sellers have control, and they've found some solid downside momentum matching the upside momentum that we saw for the previous day's trading. In terms of the Fibonacci retracement, and here today we saw the market trade almost exactly to the 161.8% level, and we saw some rejection from there, so that could be significant. The amount of rejection highlighted by the shadow is a decent amount. The sellers did lose some commitment as they tested down around that level, and it is a level that we really should be watching for tomorrow's trading at 1542. So if we see some more continued buying coming in, there is a possibility of the market trading up, or even today we really do need to be watching those levels of resistance and watch the high for a potential higher high and higher low. But really the buyers aren't showing any strength. This was about a lack of commitment from the sellers, and the sellers still have control of the market. In terms of the Fibonacci retracement, we saw the market trade back down through the 50%, the 61.8%, and close exactly at the 78.6. Rejected from below there, testing almost to the 100% level. That could be significant. Sets the market up for that potential change of trend, but not supported by the short-term dynamics. But if this market does trade lower, obviously the 100% level at 1539 comes into play, coincides with the lows down around these minor swing lows, and then we do have another level down around the 161.8% near the round number 1500, so that will be significant, but unlikely that the market will trade down to there anytime soon. Very solid levels of support before the market trades down to those levels. In terms of Ichimoku, a bullish market in the long-term time frame by trading above the cloud and maintaining its position above the cloud. But the market is now bearish in the medium and fast term time frames, and yesterday we saw the market bullish, trading above there, today trading back down below there, so another bearish breakout down below. We have this market now oscillating above and below the equilibrium offered by these two indicators, so suggesting quite an indecisive market in those two time frames, but now the balance has swung to the sellers with the market trading down below both of those indicators. The tick-out span here is within the price action, so it's not confirming nor denying what we're seeing in these markets. We don't have a good guide based on that, and really says something about the indecision in all of these timeframes that we're seeing at the moment. So in terms of moving forward, obviously some very, very close by important levels of support. Initially the 1540 level is important, then down to the 1523. But resistance is very solid overhead. We have the Kijun-sen and Tenkan-sen trading around the 1568 level, and that will be a barrier to the market if it does rise from where the market's closed, as will the 1555 level, and then a strong level at 1576. So really, in a large zone, we have quite some indecision in this market, forming quite a large congestion area bound between very solid levels of support and solid levels of resistance.